It is Wednesday, August 1st, 2018. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was a very good, very productive, get your ass kicked at Jiu-Jitsu Wednesday. I felt very, very strong today. I can't exactly determine where to attribute that to. But yeah, it was kind of weird because the whole day was kind of goofy. My vehicle's been on the outs at the moment, and so I managed to get it repaired. And there's this one little thing you got to do to get the belt on, and of course the area that they give you to do it in is just big enough for you to force a ratchet and socket into, but not be able to recover as easily. And so I completed the entire repair, and I was trying to tweak the tensioner, and somehow or another I managed to get it stuck in there, and so now I've got a ratchet and a socket stuck in my vehicle. But yeah, so that's kind of how everything started, and then it just kind of snowballed out of control from that point forward until I get all the way to Jiu-Jitsu, and I managed to lock myself out of my vehicle with the keys still in. And so I had to break into the vehicle, get the keys, and then go to Jiu-Jitsu after showing up just a teeny tiny bit late as was. Fortunately, I've been adopting this policy of running almost at least like a half a mile before I go to Jiu-Jitsu. And I'm finding out that's really calming me down. You know, it does a lot to knock the initial edge off, and so I'm not like peaked out on adrenaline when I go in there, you know. And it's weird, like the first peak out of adrenaline for me is usually the hardest. But if I get an opportunity to do some running, I'm able to kind of ease into it as opposed to kind of suffering it. Like in Jiu-Jitsu, if I go zero to Jiu-Jitsu, usually at the end of like 5 minutes, I want to get the fuck out of there. There's like something tripped in my brain. It's like, okay, I can leave now. I gotta get out of here, you know. And then I'll get about halfway home, and then my heart rate will get back down, my blood pressure will get back down, my respiration will get normal, and I'll be like, well, fuck, I could get another round in. So, in order to get around that whole situation, like I said, I started running a mile before I went into, I really tried to get a mile in. If I've got the time, I really want to do at least a mile. And also give myself an opportunity to spike it, you know, spike the speed for a few seconds, get it to a sprint, and then kind of tone it back down. And just keep a tax on my respiratory system, a constant one. And like I said, I think that helps me a lot. And I feel a lot sharper, a lot more attuned to what my opponent is doing. Usually I'm too panicked out by what they're doing to, like, you know, appropriately respond or seek an actual defense. But the opponent that I had today, he almost got me a couple times. He had my back, and I was trying to cinch out from under him to do a what do you call it? A sweep. You know, I was trying to shoulder sweep him over me, and he felt me kind of twisting in that position, and he adjusted too far, and I rolled my left shoulder back, and I put him on his back and assumed side control on him from there. But yeah, I pulled some kind of sneaky moves. And it led him to say at the end of it, man, you're getting kind of wily. That's like the best compliment I've received in jiu-jitsu. I mean, because this guy isn't like, he's no slouch, you know, and for him to say that to me, I felt really good. And like I said, I felt really solid the whole time. You know, I wasn't panicked. I didn't feel like there was a point where he was taking me to a point where I really had to be concerned about my arms or choking me or anything like that. However, I did threaten him several times, and that's, I think, one of the biggest differences in my game over the last couple months is that every time, man, I see an opportunity for a fucking zipper choke or a lapel choke or a loop choke or a baseball bat choke. I'm in there. I want to get that. You know, I almost got a fucking baseball bat choke on a really, really technical guy. I was like, yeah, almost got that motherfucker. I get you again. I get you next time. Yeah. And so it's like, you know, it's getting kind of exciting on that end. And with that, let's go ahead and throw into some music, because we haven't played any today, and for some stupid reason, this fucking program played all of the songs that I had in the queue, and so now I gotta, like, figure out exactly all the songs that I had in there. I know I had that one in there. Fuck it, let's do that one. Let's, 6th, First Dance, Scent of the Obscene, here on Coin Metal. That was a little bit of Henry Rollins there with Divine. And so, yeah, today I certainly did feel like I went through some sort of threshold or another today as far as my jiu-jitsu is concerned. I definitely paid more attention to things. Was definitely more patient and had a little more faith that there was something going on that I'd be able to catch that my opponent wasn't necessarily aware of. I managed to get this guy who he's relatively skilled. I mean, he's I would put him at a higher skill level than me, honestly. I think if I weren't as strong as I am, I would have had a lot more trouble dealing with him. I mean, a lot more. And really, that's not what I want to be able to say about my jiu-jitsu. I want to be able to say about it that, you know, I'm getting to where I'm getting on my technique, not on my strength, not on my explosiveness or any kind of physical attributes, but my brain. You know, what I'm doing with my body. And I have a really tight kind of preference. I like being really, really tight. I don't like giving my opponent room to move. You know, it's like if I feel him squirming around, I want to take it away. You know, I want him to experience no hope whatsoever while they're down there. I just want him to know I've got their arm between my arms. I've got my weight on their upper body, and there's not a goddamn thing they can do to get me off of them. I know that sounds evil, but that's how I feel, man. That's how I want to do it. Anyway, I wanted to start this off with something that's kind of a step back. I may have actually read this on this show at least once, possibly once. I don't know, maybe once, maybe when it was originally authored. It was a long time ago. But it is within the frame that I was doing the show, so it is entirely possible that I read this live on the show. Anyway, this is on Reddit. My name is Bryce Wiener, and I want to hard fork Bitcoin. And this is authored on August 14th, 2016. So about 2 years ago. Continuing on. My name is Bryce Wiener, and I want to hard fork Bitcoin. I am currently in the midst of crowdfunding my own smart contract network tailored to the needs of the music industry called Teo. Teo is designed to execute Bitcoin transactions automatically in order to settle royalty payments. I have been working with music industry insiders, publishers, artists, and regulatory bodies like the RIAA in order to develop this system and build support for it within the music industry. This may be the first time that you in the crypto community have heard of it, but we've raised over $30,000 and the project is picking up steam. I had the opportunity to have a quick chat with Kim.com, and our goals are aligned. Tao and Kim's BitCash system stand to generate thousands of transactions per block, exceeding the tolerance calculated by Segwit. Lightning networks simply are not an applicable solution to our applications. Bitcoin is open source and is still so young that no position, no matter how well entrenched it may be perceived, is unassailable. No one is allowed to stand in the way of progress for their own personal gain. No one may lay claim to authority over the network, intellectually or legally. It is for these reasons and many others that I support an Ethereum-style hard fork of the Bitcoin network, so that those of us who have valid intellectual and technological disagreements with the core developers may part company and go our separate ways. Implied ultimatums and fear-mongering over a hard fork, contentious or otherwise, are completely unfounded, and Ethereum has proven it. While the scale of a Bitcoin hard fork is many times greater than that of Ethereum, it is still possible to execute and avoid the pitfalls that plagued the Ethereum blockchain after the fork occurred. It is not that Bitcoin has failed, or that the core developers have failed, but that it is plainly obvious that while they deserve a great deal of respect for bringing us this far, the current core development team is not well suited for developing the network within the current environment. Recently, Roger Ver has made statements which indicate that he may be willing to support a hard fork of the Bitcoin network in much the same style as Ethereum. I would like to officially announce that I would support such a network and would implement my solution for the music industry on such a fork. Bitcoin requires greater transaction capacity to increase transaction velocity, which is a measure of network utility. The utility of the Bitcoin network has suffered under the current paradigm of governance, and it is time for a change. If the code is law, developers are legislators, and when those who legislate do not listen to their constituents and become corrupt in their positions of authority, the seeds are sown for rebellion. Blockstream and those core developers not employed by them have collectively failed to execute a vision for the Bitcoin network that fosters growth, inclusion of new ideas, or technical excellence. They have mismanaged the codebase and their own company, and it is time that everyone reads the writing on the wall. Myself, Kim.com, and others want to add massive amounts of value to the Bitcoin network, and we cannot due to the machinations of a few who feel they are entitled to dictate Bitcoin network policy. I reject their assertion and declare that I will do whatever I can to foster and support a contentious hard fork of Bitcoin. Long live the rebellion. So yeah, there you have it. That was 2 years ago, and I don't think it's gotten any better since, really, honestly. But yeah, that I share a lot of the views herein, and I think Bitcoin Cash has kind of proven itself as far as a scaling option is concerned. You know, it's been stress tested a couple times, even with the max cap of 32 megabytes per block. And so a lot of the FUD concerning Bitcoin Cash is just that, FUD. You know, people whine about quote unquote centralization in Bitcoin Cash, but these same people aren't mining, or at least they're not mining Bitcoin Cash. You know, if Bitcoin Cash is centralization were your problem, why not mine it? Then you'd be decentralizing the mining by doing so. I swear. Again, it's not just the publications, okay? A lot of the talking heads in crypto seem to have these perspectives that are couched in the idea that these huge companies like IBM and all these other guys, they're going to be the ones telling you how to Bitcoin. They're going to be running their blockchain second level solution bullshit, layer 2, and you're going to depend on them. They don't talk about things in terms of you being the next Satoshi Nakamoto and whipping out a string of code that just blows everybody's fucking mind and solves some big whiz-bang real fucking world problem with regard to Bitcoin and the transacting thereof. They don't talk about it in terms of you being included in that. And I find that so disappointing. Because the fact of the matter is Satoshi gave this to everybody. He didn't give this just to core to point at you and tell you fuck off, you can't participate in this shit. And there is no government entity, not now, not ever, that's going to be able to tell you that no, you can't crank out code as you wish. And because Bitcoin and several other projects in this space are open source, you can download the code, modify it how you see fit, and redistribute it. You are free to do that. You are Janet Yellen. You are Jerome Powell. That's the real power that's been given here. The power to create new scripts on the fly if need be. I mean, we got platforms coming at our ears that allow you to tokenize pretty much everything. And to me, a lot of these things are basically ways to tell you how to Bitcoin and how to do crypto. That they have their own little mindset for how they want their project to be used. But who will use it and how it will be used will actually be dictated to them by the market and not by them pointing down to us and telling us how to do it. Because you may choose not to do it at all. You might use Dash, or you might use Monero, or you might use Ripple, or you might use Dogecoin. If you happen to agree with the politics behind it, go for it. It's yours to do now. Put your fucking monetary value where your mind is. And it is with that, I want to get into this next article here. This is on Bits Online. Bitcoin Cash's first birthday marks expansion beyond just money. Whatever. Continuing on. This is by John Southhurst. So yes, penis. Authored August 1st, 2018. Hundreds gathered in Hong Kong yesterday to mark the first birthday of Bitcoin Cash. Interestingly, though, projects in Asia and beyond are now focusing more on Bitcoin Cash's capacity and for more complex transaction code to enable smart contracts rather than simple, quote, large blocks, cheaper transaction mantras of months past. I don't know why. That's probably the best feature of it. That's what makes it feasible to use your project, use it for your project. Is it's cheaper and faster. Continuing. New smart contract projects built on Bitcoin Cash include RSK, BitTorrent, Bitprim's Kyokin, and the Bitmain-backed Wormhole. They all featured prominently in the anniversary event, which also showcased a series of pitches from startups taking Bitcoin Cash in new directions rather than just building a cash spending infrastructure. Large and lavish birthday party. Anyone who expected a grassroots-style meetup event to mark the birthday of the people's everyday spending crypto would have been taken aback, not least by the huge crowd, security detail, and lavish decor at the one-day summit. Anyone familiar with past Bitcoin/crypto conferences in China probably wouldn't be surprised, though. When talking about new money, it's important to project an image of prosperity and hope. Today's Bitcoin Cash anniversary event was a tightly organized affair in the Ritz-Carlton at Hong Kong's International Commerce Center, the city's tallest building. If it wasn't clear before, it is now. Bitcoin Cash is a big deal in China. That's significant as the country is still home to a significant number of crypto miners, investors, ASIC hardware manufacturing. It doesn't hurt that China has financially savvy and economically permissive cities like Hong Kong and a huge expat community worldwide, all ready to spread the word. Bitmain seeks to invest more in Bitcoin Cash. Bitmain CEO Jihan Wu took a measured tone, though noted that Bitcoin Cash should be more than just money. Quote, "On top of this deal, we can build a strong foundation of cryptocurrency. If not, we're just building castles in the air," he said. Wu said Bitcoin could and should support multiple tokens, increasing the amount of op_return data to allow for Turing-complete scripting, since Bitcoin Cash's larger transaction blocks allow it. That would permit tools like platform tokens, contracts, and futures, which we've humbly given up to Ethereum, and Ethereum Classic and a few others. He cautioned against some of the irrational exuberance surrounding ICOs, saying that many created no new value and existed only to transfer wealth from naive investors to token sale operators. Tokens created should have some platform use, such as those launched by exchanges like CoinEx and Huobi. Bitcoin Cash, Wu said, would help Bitcoin fulfill its original aim to help business people, people in developing countries, and those ruled by corrupt governments. Veer expresses frustration at Bitcoin. Roger Ver, who kicked off the anniversary summit by repeating the calls for greater economic freedom, he admitted he's been delivering at conferences since 2011, called the date, quote, the one-year anniversary of the preservation of Bitcoin. Quote, It's still the truth for Bitcoin Cash, but sadly it's no longer true for Bitcoin. I consider Bitcoin the altcoin these days. That's a little over the top, but okay, whatever. Quote, "This has been so frustrating. I've been literally crying myself to sleep over the past couple years over what his opponents have caused the original Bitcoin to become." Zhang Ziao, equity stock is the next step. No, it's not. Investor and BTC top CEO Zhang Ziao ramped up the libertarian rhetoric, saying governments tended mostly to inhibit humans' ability to transact and create money they wanted to use. Monetary liberty was Bitcoin's first outlet from government control, but the second is the liberty to issue equity stock. He called for more smart contract layers on top of Bitcoin Cash, referring specifically to Wormhole. Quote, "Currency itself doesn't require new functions, but currency competition does," he said. Jian said not every Bitcoin user needed to operate a full node, asking, quote, "Do we ensure the safety of our food by making everyone farm?" Actually, yes. Wright talks about automated companies, takes aim at Lightning Network. Dr. Craig Wright, who may or may not have mined the first ever Bitcoin Cash block in 2009, has been an outspoken proponent of Bitcoin Cash as something that Bitcoin was always meant to be. And it was always supposed to be something more than just money. No, not really. It was supposed to be money. Truly automated companies with real shares, common stock, dividends, and voting rights were just as significant to achieving economic freedom as non-governmental controlled digital cash. No, not really. Quote, This is where the big money starts getting involved. Yeah, who gives a fuck? Wright said. Real investors today don't take crypto seriously. I don't really give a fuck. Regarding it as little more than a game, which it is. So we don't just need coins and utility tokens. We want automated governance. No, we don't. BCH-based smart contracts permit bonds and capital raising, interests, and automated ratings, tracking, choice of exchanges to switch funds. Wright also took a few shots at Lightning Network, which he called, quote, not a protocol but a proxy. LN node operators might feel safe now that they aren't covered by regulation, but in the future they need to register as money handlers, and that would bode poorly for even today's operators. It takes governments 5 years to notice, understand, and start enforcing laws that apply to new technology. Yeah, that's why you should stay as fucking miners instead of trying to process people's transactions as a fucking Lightning node operator. Continuing. He also refuted the notion that more nodes meant more decentralization. Actually, he's incorrect there. More nodes does mean more decentralization. But miners. Not this fucking LN node bullshit. Continuing. Does anyone actually know what the hell decentralized means? He asked. You don't get more decentralized by adding nodes, you get it by adding connections. If we didn't have ASICs, we'd still have data centers. Businesses using blockchain technology didn't want something experimental, they needed certainty, he added. Bitcoin's core design was, quote, set in stone in 2009, and changes since the 2017 fork represented something untested and different to the way Bitcoin was supposed to function. I could not agree more. See, that's what confuses me about that guy, is that half of the stuff that comes out of his mouth is true and sound and so on and so forth, and very, very apt and correct. And then the other half is out in the fucking bushes somewhere, where he's talking about licensing IP and having to register with him, and then all of a sudden I lose all interest in what he's talking about. Continuing on. David Jerry, first birthday shows fork worries were false. SBI Bits David Jerry Chan, said Bitcoin Cash reaching its first birthday had dispelled many of the predictions of doom some had made before the hard fork. Bitcoin Cash had not led to a proliferation of hard forks, mining had not centralized, Bitcoin Cash had not had any problems scaling, and proof-of-work energy usage was not the issue many had tried to make it. He added to the concerns over Bitcoin's Lightning Network, saying the coins locked away in Lightning Network channels would eventually have a different value to those remaining, quote, free to use. He displayed a graphic and showed the Lightning Network was indeed coalescing around several major nodes. This could lead to further problems such as fractional reserve practices and double spend risks if atomic swaps between nodes become a reality. Jerry also called for more merchant payment protocols for Bitcoin Cash and tokenization layers. I don't see any need for tokenization layers. I mean, I do in the sense of maybe like an in-house thing, like you have your own little token that you trade around, you move the Bitcoin Cash around within your own system, and that would be cool, because then you could store the Bitcoin Cash cold storage, and as long as it remains there, you could use it. But then that always ends up with the issues of custodianship of the funds and so on and so forth. Continuing on, I mean, and if you're doing it for just your funds, that's good enough. But if you're doing it for other people's funds, then it starts getting tricky. Time for Bitcoin Cash to move on. At 1 year old, Bitcoin Cash's community believes it's time to move on from the Bitcoin scaling debate that triggered the August 2017 blockchain split. If the Hong Kong summit was any indication, it has plenty of support from both developers and the investors and miners that will keep the network operational. Some president predicted another birthday party in August 2019, and that it would be even bigger than this year's. I think you're absolutely correct. I don't see any reason for Bitcoin Cash to go away, and with 32 megabytes per block as a maximum on their block size limit, I don't see the same issues for them that I see ahead for Bitcoin. As a matter of fact, I think Verge is going to be taking a bit of Bitcoin's market share coming up soon. I mean, now we won't be alone in taking some of that market share, but it's going to be because of the cost of transactions. And the general public's objection to the idea of using Bitcoin as a refillable Visa card. I mean, that's not something that I make up. Okay, that's something you can actually check in the block stats. When you check, they're at about like 36-37% for Segwit. So it shows you what the actual market sentiment is concerning this thing. I mean, we're talking about what, year 3 into this thing, 2.5 into this whole Segwit debate, and most people don't use it. Most people don't want to use it. I don't want to use it. And so when you add on top of that the Lightning Network, hell, they just lost about, I think it was 40% of the network's value. All the Bitcoin that was tied up in it. Half of it just went away because one guy decided to vacate. You want to talk to me about centralization? And he bailed because he found out it wasn't really worth it for him. And I think that I figured out the scale of this thing a long time ago. That you need to be opening multiple payment channels and having them open for months and putting a shit ton of money on each one for it to be worthwhile. Because then you're managing, funds for thousands, possibly even millions of people on those channels. And like I said, you're keeping them open for months. If there isn't a custodial requirement involved, I would be really surprised. I'm almost positive that if you're a company and you have to register with anybody, that they're going to take one look at your shit and they're going to say, yeah, you're a money transmitter. You're going to have to pay for an MSB license. Now, I'm sure there's going to be some kid out there that figures out how to make a node and not need to register with anybody. However, what I'm also just as certain of is that there's plenty of intellectual property involved in Lightning Networks that is proprietary already, meaning it might be open source, but somebody does have a patent on it, and they're free to exercise that patent however they wish. A lot of the people in Lightning don't talk about that. But Blockstream and Lightning Labs, they both have patents concerning this technology that they've been trying to kind of wedge people into using. It's already their shit. They already have discretion over how it's to be used. And so maybe they decide sometime in the future when this shit goes into quote-unquote production, where you will have to be licensed through them in order to use their software. And if you don't register, your transactions won't have the special little taint. And because they don't have the special little taint, they don't get included in a block. And you're asked out. You've just been censorship resisted. Fucking kids. I swear to that. And that's what drives me nuts about this stuff, is that there's nothing beyond your reach as far as understanding this technology and understanding what's going on here. There's fucking tomes of data out there for you to assimilate concerning this. And not just this show. I've got hundreds of episodes up on my YouTube channel. You could be listening to those and getting a background on all of this shit. A loose one at that, but nonetheless, some sort of context. And you could be doing the same thing with dozens of other people on YouTube all kinds of people on Twitter, Facebook, Telegram. There is no barrier to entry in this. It's your level of interest. If you're worried about your age being an encumbrance, make up a bullshit ID and use that. There's nothing beyond you anymore. You gotta quit fantasizing that there is. There's no mommy and daddy here. There's people that assume the position of a mommy and daddy that existed in the previous system that wasn't obsolete, but the system that they're operating in is kind of obsolete these days, especially where it pertains to, or where they imagine it pertains to, cryptocurrencies. Anyway, let's go ahead and throw back down into some music. It's been a little while. And I've been wanting to play some Infectious Grooves, and there's Infectious Grooves going on in the background. Punk it up. That's what it's got to be. Here we go. Infectious Grooves, Punk It Up. Here on Coin Metal. And I'm not going to do that to you. That was, the last song there was Korn, Got the Life. That was a request from the Discord channel. I do take requests. Even though I tend to select my my music specifically, and some of you may have noticed that. But I do accept requests, and if I have it, generally speaking, I'll play it. Anyway, I got this article. I started digging a little bit deeper into Bitcoin Cash, seeing as this is their anniversary, the 1-year anniversary. And I've got a few articles here that I wanted to get into. So this one's on Blockonomy. Blockonomy.com. Bitcoin Cash 1 year later. Where does BCH stand today? And this is by Robert DeVoe on August 1st, 2018. Today marks the first 1 year anniversary of Bitcoin Cash since the original fork completed OK August 1st at block 478,559. Since then, Bitcoin Cash has become the most dominant and highly valued Bitcoin fork that retains any portion of the quote Bitcoin name. While other forks like Bitcoin Gold and Bitcoin Diamond have mostly failed to keep interest up, Bitcoin Cash has attracted an almost religious following, with legions of believers swearing that it is the true Bitcoin and that Bitcoin is merely a predecessor or ancestor to what they consider the only real Bitcoin. But how has the asset performed in the last year in terms of adoption and financial growth? BCH 1 year on, financials. To understand where BCH is today, we need to understand where it came from and when it from when it was born through the August 1st, 2017 fork. When BCH first appeared on CoinMarketCap.com, the asset was trading for $555. Today, Bitcoin Cash is trading for around $750. When it comes to USD value, Bitcoin Cash is showing a clear, steady upward trend since its inception. Here's what it looks like on a graph, and yes. Now let's take a look at how Bitcoin Cash has performed against Bitcoin. On launch, Bitcoin Cash went for 0.199 Bitcoin, or roughly 5 Bitcoin Cash, could be bought for 1 Bitcoin. But when we fast forward to today, we can see that Bitcoin Cash has dropped by half in terms of Bitcoin value. Today, just over 10 Bitcoin Cash can be purchased with 1 Bitcoin. This can be seen in the graph below. BCH transaction volume. With the numbers out of the way, let's take a look and see how many transactions Bitcoin Cash is processing each day as a network. Here is the transaction chart from bitinfocharts.com. According to these charts, Bitcoin Cash started with an average of between 5,000 and 10,000 transactions per day peak periods excluded. Since 2018, however, transactions per day have increased to an average of 20,000 per day, with the number of high peaks topping out at 100,000 per day. But how does that compare with Bitcoin? The last 12 months has seen Bitcoin processing transaction amounts of between 200,000 and 400,000 per day. So when we compare this to Bitcoin Cash, what does this tell us? Simply put, Bitcoin Cash is undoubtedly growing, but it still has a long way to go until it is seeing Bitcoin levels of activity. Bitcoin Cash use cases. One last thing we'd like to consider is who is accepting Bitcoin Cash. As the name suggests, Bitcoin Cash is intended to be a more nimble currency that is ideal for real-world use cases like buying goods and services. According to this tweet by Bitcoin.com, a site that is overtly pro-Bitcoin Cash and anti-Bitcoin, and that's not entirely true. Bitcoin Cash has 10,000 plus merchants that accept it. Another site, acceptbitcoin.cash, lists a total of 687 merchants that accept Bitcoin Cash. Admittedly, it is a difficult undertaking to try and track every single business that accepts Bitcoin Cash or any other cryptocurrency. However, evidence suggests that a growing number of merchants and businesses are accepting Bitcoin Cash as a form of payment. The same can be said for Bitcoin. According to a 2015 article in the IB Times, there were 100,000 or more merchants accepting Bitcoin at that time already. Given recent trends, it's safe to say that the number today is decidedly higher than it was back in 2015. Wrap up. So what does all this mean for Bitcoin Cash? We here at Blockonomy don't have a specific opinion on Bitcoin versus Bitcoin Cash debate, but the numbers tell us two things. First, Bitcoin Cash is growing. Its USD price is up, its transaction volume is up, and merchants are accepting it for payment. Second, Bitcoin Cash still has a long way to go in order for it to catch up or replace Bitcoin. For the Bitcoin Cash faithful, however, things are looking bright, and there is still a lot more room left for growth and expansion. I tend to agree with this. It'll be interesting to see how Bitcoin Cash expands over this next year, really. I think that there's been a little bit of nut flexing as of late with regard to legislation, and I think that in the shorter term it's probably scaring some people, but I think in the longer term, as we start to look for other ways to pay for items, as in using currencies that aren't losing their value as quickly as the US dollar is, that Bitcoin Cash will display itself as a superior option to Bitcoin, possibly, and only because it doesn't have all the technical requirements that all this fucking Lightning Network shit has. I mean, if you just anticipate the increase in value of Bitcoin versus the US dollar just based on fiat inflation increases. So when the Fed says, hey, we're going to engage in more QE, or we're going to do some stock buyback program or bond buyback program or some shit like that, we're going to see an increase in Bitcoin's price because of that. And over the longer term, that's going to cause transaction fees to get higher. And so people are going to start looking to other cryptocurrencies as a means to fulfill their needs to move money around. And I think that Bitcoin Cash is probably better positioned should Bitcoin experience a significant shift in adoption. You start seeing a lot more people trying to get into it, like we did back when it got to $20,000. I mean, I think some people forget about that time. Paying over $100 for a miner fee. Can you imagine that? And there's some people that think that's cool. That's good. Pfft. Give me a break. Anyway, I got this next article here. This is on Coindesk.com. 1 year later, a wave of apps is emerging on Bitcoin Cash. This is by Alyssa Herdig, and it was authored August 1st, 2018, 2:30 UTC. So no penis. Happy birthday, Bitcoin Cash. Tuesday marks the 1 year anniversary of the first block on the crypto protocol that split from the Bitcoin network, now the fourth largest by total value after a years-long disagreement about the course the cryptocurrency should take. For supporters, the main goal for the competing protocol was increasing the block size to allow more transactions and in turn more users, all in an effort to make cryptocurrency competitive with more traditional payment rails. But whether or not that plan would work out, it was very unclear, if not highly criticized. Absolutely highly criticized. Yet over the course of the last few months, around the same time developers raised its block size parameter from 8 megabytes to 32 megabytes, Bitcoin's limit is 1 megabyte, Bitcoin Cash has seen an influx of new projects, including social media and tipping methods, taking advantage of its blockchain. Since many of Bitcoin's most active developers were adamantly against the tweaks Bitcoin Cash stood for, the developers behind the alternative protocol see these apps as proof their offering is competitive. Looking through the applications that have sprung up, it's clear that those drawn to Bitcoin Cash were trying to carve out a unique role for the cryptocurrency, one that aligns with the initial value proposition touted. Many of the applications targeted users with cheaper, faster payments like BlockPress, a social media platform, and Centbee, a wallet that uniquely integrates a user's phone list. But there's also some work being done to make Bitcoin Cash a more complex blockchain, able to handle smart contracts and token launches. Quote, the tremendous accomplishments that the Bitcoin Cash community has managed to garner in a year of existence with a new ticker, wallets, and an all-around ecosystem has been phenomenal. And we hope to continue and increase on this trajectory, Ellie Afram, founder of Bitcoin Cash Australia, an advocacy group for the software, told Coindesk. He added, there's a lot happening. We truly have an app explosion in full effect. Space and fees. For many app developers, the lure to Bitcoin Cash is all about the protocol's unique selling proposition, basically more space. Take for instance Memo.cash, a social media platform resembling Twitter where users can post short messages that get stored on the Bitcoin Cash blockchain, never to be erased. Since Bitcoin Cash allows for more data to be stored in each transaction, supporters argue Bitcoin isn't capable of supporting an app like MemoCash. Quote, many of these apps cannot work on the Bitcoin network simply because of certain limiting changes that have been made to the code base. For example, the op_return function on Bitcoin cannot take the same size payload as Bitcoin Cash, meaning an app like Memo would have a restrictive message size limit, Afram explained. On top of that, more space within blocks also means reduced fees for users sending transactions. For GetCash, which launched just last month, this is integral since it allows users to tip, no matter how small the amount, developers for their work on GitHub. The project emphasizes that Bitcoin Cash's model allows fees to stay low even if usage increases dramatically. And for developers that work on open source projects, generally on a volunteer basis, this app will likely be a welcome development. Yet the timing of these apps that focus on fees could be off. Many of these developers compare the fees on Bitcoin Cash to those of Bitcoin during the latter's most popular time period, whereby fees eclipsed $20 per transaction. But right now, Bitcoin fees are rather low, sometimes even lower than those on Bitcoin Cash today. I have yet to see that, but still, supporters say it's still worth it to build on Bitcoin Cash since it's future-proofed, meaning ready for a day when usage of the protocols picks up again. Alejandro de la Torre, Vice President and Business Operations at BTC.com, a mining and wallet provider focusing on the cryptocurrency, told CoinDesk, quote, "We think these community-driven networks can be very effective at moving the needle in the adoption of Bitcoin Cash as a medium of exchange, which is the primary reason it was forked and developed." Scalability concerns. But even while all this innovation happens, there is a big downside to increasing the amount of data kept on a blockchain. Namely, it could make it much harder for users to run an underlying infrastructure that makes Bitcoin Cash tick. That's why in Bitcoin, many developers are heads down working on the Lightning Network, in progress layer for pushing transactions off-chain. Despite these alternatives, Bitcoin Cash supporters think raising the block size is a better and easier solution. I do too. Bitcoin Cash's last hard fork increased the block size to 32 megabytes, virtually eliminating the risk for any network congestion due to scaling, and paved the way for a low-cost transaction superhighway, de la Torre said. He believes that making that one small change, Bitcoin Cash will avoid the scaling problems other blockchains have faced. Referring to the CryptoCat app that went viral and caused high fees and transaction backlogs last year, de la Torre said, quote, "I don't think we'll see the Bitcoin Cash network get clogged by CryptoKitties anytime soon." And for de la Torre, the fact that there's so much space within Bitcoin Cash means that plenty of other long-heralded use cases for cryptocurrency might see some pickup. Quote, "In countries such as Venezuela, where monetary inflation is estimated above 40,000%, the utility of this new block space to open up fast, low-cost transactions as an alternative payment system to local fiat has been more than salient," de la Torre added. Yet, that hasn't necessarily happened in practice so far, not for Bitcoin Cash, which only sees a fraction of the transactions on the main Bitcoin network sees, and is worth about a tenth of Bitcoin by market cap, but not for Bitcoin either. But also not for Bitcoin either. The wormhole. And not only are the developers thinking about high-value payments use cases, but the use cases that garnered incredible attention last year, the initial coin offering, ICO, is also being considered for Bitcoin Cash as well. Putting to a long-standing upgrade proposed by Bitcoin Unlimited developer Andrew Stone, my apologies, sir, Ephraim told CoinDesk, quote, "There are teams racing to produce a token protocol that will enable countless new use cases, which I'm very much looking forward to." And a couple of weeks ago, cryptocurrency mining giant Bitmain released a proposal for adding a token mechanism to Bitcoin Cash, perhaps eerily dubbed Wormhole. The idea behind these proposals is to make it possible to spin up new tokens on Bitcoin Cash. But just as ICOs broadly have taken vast amounts of criticism, the idea is sparking controversy amongst Bitcoin Cash users and developers too. Some have argued that the birth of tokens on the network will poorly impact the protocol, and even worse, could introduce vulnerabilities that could put users at risk. Still, that isn't stopping several developers from trying to implement the upgrade into Bitcoin Cash's next hard fork coming in the fall. As such, crypto tokens could be the next step towards differentiating Bitcoin Cash from its rival Bitcoin and adding features that allow it to compete with even more protocols. Yeah. I think that part of the problem here is one of the same problems that Bitcoin faces, is that so many people look at it and they see what it can do and they say, oh, well, I want it to do that for just me. And they don't think about things like what their specific demand is going to be on the network and how that might impact other users on the network. So this whole tokenization thing, I really give a fuck about tokenization, honestly. I mean, if you want to do it to where, like, I don't know how to put it. Like, so Cabela's, every time I go to Cabela's, they're trying to sign me up for a Cabela's specific Visa card, right? Well, imagine something like that where I could only spend it at Cabela's, right? And so I put X amount of Bitcoin Cash on it, and they give me Y amount of Bitcoin Cash tokens, or Cabela's tokens, or Bass Pro Shops tokens, or whatever it may be, to be spent on their system. To me, that's no different than the fucking Lightning Network bullshit. So, like I said, I don't really go in for tokens. I really think that if you have a project that's worthy of backing with hashing power of any kind, that you should be generating it yourself. That you should not be looking to piggyback it on another person's technology. But that's just me. And as far as changing Bitcoin Cash to where it can facilitate all these changes, I don't see that it's absolutely necessary. We have plenty of projects that do this shit. And so, I mean, if you want to compete with it, yeah, okay, fork Bitcoin Cash again. Fork it again to where, you have your Bitcoin Cash off-chain fucking tokenization bullshit network, and then you have Bitcoin Cash, the Bitcoin Cash that was meant to be used as cash, as you claim. I look at all of these quote-unquote innovations as giving up freedom. And I know that's kind of interesting to suggest, but you do lose freedom by taking your monetary value and putting it into one of these systems. Again, whether we're talking about Lightning Network or we're talking about an ERC20 token, and they all have their own little rules and their own little advantages and whatnot, but how you're able to use them is where it counts. And if you're only able to use them within specific use cases, well, that cuts the utility down to just a few use cases. And when contrasted with other projects in this space, you're going, okay, well, I'm going to give up about 70% of my freedom, but I'll still have that 30% and it'll be 70% more secure going this route with it. Or I could accept the risk of the fact that I am transacting in cryptocurrencies and just deal with it. Deal with the responsibility of doing that. Checking and verifying the addresses that I'm going to send money to. Making sure that everything is lined up right. I don't really see the utility in a lot of this stuff. I can see the utility in some of it. Like we were talking earlier a little bit about Bryce Wiener's Tau project, or Tao. I can see for some use cases for that, where like a YouTube video would have some sort of payment method where it, say my videos, somebody watches them, they only watch 30% of them though, right? If I'm to receive any kind of royalty whatsoever, it should at least be limited to the the amount of media actually consumed by the consumer. So if they only listen to 30 minutes of one of my shows, I should only get money for 30 minutes of it. You know, but at the same time, I'd like to leave the music in, and so like if they listen to an entire show, all of the music, all of the musicians that were involved in the compositions that I played would get compensated. That's the kind of market that I like, or the kind of idea that I like. But yeah, you know, that's about as far as I would go with any kind of like mechanization or AI or any of that other bullshit. Is make it lightweight in that where I don't need to have a whole bunch of regulatory craft and whatnot to just simply not have it, or looking at the model and determining where I can cut it even more, you know, and just trying to compensate myself, the channel, and all of the artists involved in the music in a fair way. That to me is something that needs to happen. I'm sure that somebody is working on it at this moment, and if you aren't, get on it. But yeah, Bitcoin Cash, I think it's just fine without this wormhole business. What they really have to worry about is getting regular retailers to use their money. That's it. You know, all these other concerns, don't worry about what other people are going to do with it. Let them figure out what they're going to do with it. Provide a stable fucking currency. And when I say stable, I don't mean monetarily non-volatile. I mean that your network is up, and that you're stuffing as many fucking transactions per block into each block as possible. You know, I've said it before and I'll say it again, that, you know, 32 megabyte, it doesn't matter if you're not fitting all of the transactions you can into it. As far as I'm concerned at this point, Bitcoin Cash should never have transactions hold up in a fucking memory pool. Ever. You got 32 megabytes to stuff transactions into. I don't give a fuck if they're free transactions. Put them in the fucking block, clear the mempool, and increase your rep. I mean, people forget that there was a period on Bitcoin where you did not have to pay a fucking miner fee. At one time, it was called a miner donation. It wasn't even called a tip. It was called a donation. That's non-compulsory at all. That's completely fucking optional. And your transactions would get included in a block. Anyway, let's go ahead and throw back down into some music. I'm winding down just a tad. I want to get recaffeinated a little bit. And as far as what to play, though, that's sometimes an issue, especially as I've been increasing my repertoire. Let's go ahead and throw down some old school Megadeth here. Killing is my business, and business is good. Here on Coin Metal. And that was Anthrax with Got the Time. I forgot to post that. Damn it. Anywho, we're coming down to the last half hour of the show, and I do have a couple things that I wanted to talk about. Yeah, we'll talk about mining first, because I think with regard to Bitcoin Cash, I see it as a little more incentivized as far as mining is concerned, because think about it this way. 32 megabytes means you fit 32 times as much transactions as you can fit in a Bitcoin block. And even if you do all Segwit transactions and double your transactions, you're still only talking about, you're still talking about, 16 times the amount of space per 10 minutes. That's a lot of fucking transactions. Okay? So here we go. This is on Bitcoinist.com. where I'm going with that is transactions have transaction fees. And like I said before, even if not all of them are paying, that's a lot more transactions. And so that means you can make a lot more money on transaction fees, even if you are charging the cheaper amount on Bitcoin Cash. And I think if they ever really get up to, where they're scraping the ceiling on those blocks, that they might be amenable to increasing the block size yet again. And that goofs up the metrics, but it also makes transactions cheaper for people to do on chain, which I think is the most important part about this, is that with Bitcoin, the value of it is defined by the fact that you can actually participate in the creation of new Bitcoin and also new code to use the Bitcoin. Once that stops being true of Bitcoin, then it stops being Bitcoin. Anyway, continuing on. Increasing number of nations are competing to be the most Bitcoin friendly. And this is in stark contrast to a lot of the shit that we've been reading about people wanting to negate the advancement of mining in their vicinity. It's so fucking stupid, so short-sighted. They always say that shit initially until they start seeing that despite whatever they say, other people are mining within their vicinity. They say no to some big-ass mining farm being set up there and creating jobs and all that business. But, their kids and their neighbors' kids and their neighbors' neighbors are mining. And when they see the increase in economic activity that these people are enjoying because of their newfound revenue stream, they sober up really fucking quick. And they start saying, why are we trying to keep this out of our area? Why are we trying to keep this out of our city? This could bring jobs. This could bring money. It's certainly working in China. Anyway, continuing on. This is on thebitcoinist.com. Increasing number of nations are competing to be the most Bitcoin friendly. And this is by Julio Gil Pulgar. And going from the picture and the name, yes, penis. And let's see, this is authored on August 1st, 2018 at 2300 hours. No indication of time zone. Come on, Julio. Tell us where you are, man. Several countries are racing to become the world capital of cryptocurrency technologies. Bermuda, Gibraltar, and Malta are now competing with France to lure cryptocurrency companies to establish headquarters in their respective capitals, advancing initiatives to expedite the growth of the crypto industry. Tax havens and business paradises such as Bermuda, Gibraltar, and Liechtenstein and Malta are fiercely strategizing about how to attract crypto entrepreneurs. These countries and territories are passing or easing legislation to make their environments more enticing for crypto businesses. Quote, and this is from the New York Times reports, in Malta, the government passed 3 laws on July 4th so that companies can easily issue new cryptocurrencies and trade existing ones. In Bermuda this year, the legislature passed a law that lets startups doing initial coin offerings apply to the Minister of Finance for speedy approval. Man, who gives a fuck about their approval? Just do it. Bermuda is also aggressively putting forward initiatives to facilitate the growth of its fintech industry. Bermuda's Digital Asset Business Act of 2018, recently enacted by the House of Assembly, aims to set up a framework to, quote, regulate persons carrying on digital asset businesses and for the protection of the interests of clients or potential clients of persons carrying on the business of digital asset business. Liechtenstein seems to be already a few steps ahead in this race. The principality's banks can facilitate crypto transactions on behalf of their clients and provide advice on initial coin offerings. That's pretty progressive. Yaroslav Melahov, also known as the, quote, godfather of Ethereum and founder of Eternity, illustrates how easy it is to incorporate a crypto company in Liechtenstein, saying to Forbes, quote, you can open a company without a bank account just by using Bitcoin or Ethereum. Wow. In January 2018, Gibraltar passed legislation to facilitate fintech innovation. Specifically, distributed ledger technology regulatory framework aims to protect customers of cryptocurrency business in British overseas territory. As a consequence, the local recruiting agencies such as Recruit Gibraltar are enthusiastically becoming involved in the crypto industry. Most recently, one of Gibraltar's soccer teams, Gibraltar United, announced that it would become the first team to pay its players with cryptocurrency. Powerful European countries are also luring crypto startups. Not only small countries, overseas territories, and European principalities want to incubate and lead the crypto industry, and they're not going to be very successful. France and Switzerland also wish to be hubs of the industry. I'm sure they do. For instance, admitting that he was once wrong regarding cryptocurrencies, the French finance minister Bruno Le Maire now calls for making France the epicenter for blockchain and cryptocurrency technologies. Yeah, just shut the fuck up about him, it'll happen. In effect, in March 2018, Le Maire emphasized that, quote, the interests are aligned between government on one side and the crypto community on the other. No, they're not. And he outlined his plans to back the French blockchain and crypto industry, assuring entrepreneurs of his, quote, total and determined support. I don't care if he supports anything. Switzerland already makes it easy to attract Bitcoin and other cryptocurrencies into the country because of low taxes and supporting regulation. Notably, Ethereum is incorporated in the Swiss city of Zug. Moreover, for the past 2 years, Zug, also known as Crypto Valley, has been accepting Bitcoin payments for services. Crypto enthusiasts are encouraged because many countries are now starting to envision the amazing opportunities that Bitcoin and its technology offer to improve their economies. As a result, many of them share the same purpose. As Malta's Prime Minister put it, quote, we aim to be the global trailblazers in the regulation of blockchain-based businesses and the jurisdiction of quality and choice for world-class fintech companies. What do you think is the most Bitcoin-friendly country in the world? Let us know in the comments below. Let's see what has anybody said anything about it? Nope. Oh, wait. Shows one comment. Malta. That was by Jesse Bost. Yeah, like I said, I think the best thing they can do is just shut the fuck up about it and let it happen. You know, don't worry about it. If people find your taxation and your energy costs and all that other stuff, if they find it suitable, they're going to bloom where you are. You know, and so like I said, the best thing you can do is just shut up about it. Don't worry about it. Worry about keeping your legacy markets in order. Get those in order. Then come talk to us about how much you need to regulate us. People forget. Cryptocurrencies are a response. They are a response. Only so many years could go by of Satoshi Nakamoto and others looking at what was going on with fiat markets and nobody doing anything. As I said, Bitcoin is a response. Cryptocurrencies are a response. You know, it's like there was an ever-growing lack of faith in the fiat currencies that we have to transact in, and a lack of favor with the conditions in how should I say this? The markets around fiat currencies. And there was this growing dissatisfaction, and it had to be expressed in some way. And so now we have Bitcoin. And Bitcoin isn't the first attempt. There have been attempts over the last, several attempts actually, over the last 30 years to create financial systems and currencies that were entirely independent of the banks. And I mean, now that we actually have the open source software to facilitate all of that, the idea that it's going to contain itself to any one locality and express itself in any desired way, I think is folly. Utter folly. That what we are going to see is that the market is going to express itself how it feels necessary to express itself. And, it's like we just threw a bunch of tools out there for people to use. And people are using them. And the reflections of how they're being used isn't usually conveyed in a lot of these articles. And I find that to be kind of disturbing. I mean, a lot of the stuff that we do read on this show, it all talks about, governments and multinational conglomerates and their involvement in this space. I really want to start getting back more into the grassroots stuff, because, I mean, not only do my interviews get a lot more views, but I actually prefer that end of it, because I think it orients people with the concept that there's nobody with superpowers here. There's fucking smart people, no doubt there. But a lot of the smarts that they have was accumulated via experience, just from doing. They did it, they tried it, it didn't fucking work, they went back, they tried it again. They went back, they edited some code, they hit compile again, and they tried it again. And so here we are. 10 years of people doing that. And this whole time, there's not been any kind of regulatory authority barking down on our throats saying you will use cryptocurrencies these ways, and you will not use them in ways that we do not tell you to use them. And I think it's kind of telling that how much of this space is actually quote-unquote legitimate commerce. Meaning people buying stuff that isn't quote-unquote criminally associated. And I think that will grow even more, especially when we get these flare-ups. Like in Venezuela, we caught that little clip where they were saying that the Venezuelan bolivar has experienced a 40,000% increase in inflation. I don't know about you, but I couldn't keep my monetary value in that kind of vehicle. If I had the option to buy Dogecoin, I would. Even though it's gone down in price, it's still retaining its monetary value better than the Venezuelan bolivar. And I don't know what that really says about either currency, other than it's going to be easier to keep as much of your value as possible by holding it in Doge, in contrast to the Venezuelan bolivar. It's kind of obvious. And so you just need to find people that are willing to accept Dogecoin as a means of payment, and you're all set. I think that in places like Venezuela, that's probably not all that difficult to do. It's like, what? You got Dogecoin? I'm all on it. Anyway, I did want to touch on this article, and this one's on Bloomberg. And this is one of those signals that I've been kind of waiting for, and I expect it to continue. And some of the impacts that they're showing on here, I think will actually come to fruition. Simply because people aren't using cryptocurrencies in the ways that these people envisioned that they would, or that they would be able to coerce them into doing. Continuing on, this is on Bloomberg. Cryptocurrencies, blockchain, once seen as a corporate cure-all, suffers slowdown. This is by Olga Karif, and so I'm going to assume no penis. This is authored July 31st, 2018 at 5:05 a.m. PDT. Thank you very much, Olga. Corporate America's love affair with all things blockchain may be cooling. A number of software projects based on the distributed ledger technology will be wound down this year, according to Forrester Research Lab Inc. or Research Inc. And some companies pushing ahead with pilot tests are scaling back their ambitions and timelines. In 90% of cases, the experiments will never become part of a company's operations, the firm estimates. Even Nasdaq Inc., a high-profile champion of blockchain and cryptocurrencies, hasn't moved as quickly as hoped. The exchange operator, which talked in 2016 about deploying blockchain for voting in shareholder meetings and private company stock issuance, isn't using the technology in any widely deployed projects yet. Quote, "The expectation was we'd quickly find use cases," Magnus Higland, Nasdaq's senior vice president and head of product management for marketing technology, said in an interview. Quote, "But introducing new technologies requires broad collaboration with industry participants, and it all takes time." Betting on blockchain. So far, IBM and Microsoft have grabbed more than half of the blockchain spending. Blockchain is designed to provide a tamper-proof digital ledger, a groundbreaking means of tracking products, payments, and customers. But the much ballyhooed technology has proven difficult to adopt in real-life situations. As companies try to ramp up projects across their businesses, they're hitting problems with performance, oversight, and operations. Hype versus reality. The disconnect between hype and reality is sufficient. Quote, "I've never seen anything like it," said Rajesh Kandaswamy, an analyst at Gartner Inc. In terms of actual production use, it's very rare. That could be bad news for makers of blockchain software and services, which include International Business Machines Corp. and Microsoft Corp. They're aiming to make billions on cloud services that help run supply chains, send and receive payments, and interact with customers. Now their projections and investors' expectations may need to be tempered. Quote, "Blockchain is supposed to be an important future revenue stream for IBM, Microsoft, and others in equipment sales, cloud services, and consulting," said Roger Kay, president of Endpoint Technologies Associates. If it materializes more slowly, analysts will have to make downward revisions. IBM, which has more than 1,500 employees working on blockchain, said it's still seeing strong demand, but growing competition could affect how much it can charge clients, according to Jerry Cuomo, vice president of blockchain technologies at IBM. Microsoft also remains upbeat. Quote, "We see tremendous momentum and progress in the enterprise blockchain marketplace," the company said in a statement. "We remain committed to developing cutting-edge technology and working side by side with industry leaders to ensure business of all types can realize this value." So far, IBM and Microsoft have grabbed up 51% of the more than $700 million market for blockchain products and services, Wintergreen Research Inc. estimated earlier this year. For a large swath of companies, blockchain remains an exotic fruit. Only 1% of chief information officers said they had any kind of blockchain adoption in their organizations, and only 8% said they were short-term planning or active experimentation with the technology, according to a Gartner study. Nearly 80% of CIOs said they had no interest in the technology. No delay. Many companies that previously announced blockchain rollouts have changed plans. ASX Ltd, which operates Australia's primary national stock exchange, now expects to have a blockchain-based clearing and settlement system at the end of 2020 or the beginning of 2021. 2 years ago, the company was aiming for a commercial blockchain platform within 18 months. Hey, where else have we heard that term, that timeline? 18 months. 18 months. It's only 18 months away. Just 18 more months and we'll have it. Where have we heard that before? Lightning. Yeah, that's it, lightning. You know, a lot of these projects, I've been saying that I think a lot of them were planning on doing all of their shit on the Bitcoin blockchain. When they're talking about, quote, blockchain technology, they're talking about doing, quote unquote, layer 2 technology on top of Bitcoin transactions. That's why they're setting their timeline back out another 18 months. Because Lightning isn't there yet. And they were hoping to just like jump on board with that thing and log it all on the Bitcoin blockchain. But yeah, I see that as kind of a narrowing window. I think there's a lot of attrition going on all sides of the game board. But I think the waning interest in Bitcoin in particular has caught some people's attention. And certain vendors have latched onto this idea like, oh, hey, we're just going to waltz right in and snatch this right out from under everybody. And that's turning out not to be the case. And I kind of predicted it wouldn't be. And I still believe that in the longer term, what we're going to find out is that all of these companies that were battling around with blockchain technology will get back to the basics and will say to themselves, wait a minute, we do manufacture hardware, don't we? This whole blockchain thing isn't quite working out the way we thought it would, but we do manufacture hardware. Why don't we try and get in on this whole mining thing? I mean, seriously, between Microsoft and IBM, if those two got together with a consumer level mining platform that everybody that bought it would be able to dedicate their hashing power however they want to, keep everything open source, but be a hardware provider. Provide high quality hardware. Use that 60 years of developing consumer level hardware and put it all together into a platform. You know, trying to struggle around and control how we use cryptocurrencies, how we're going to use quote unquote blockchain technology, it's folly. I've been saying this all along. It's fucking folly. You know, you might as well just take your own sabbats off and chuck them into the gears. And it is with that I'd like to close out this episode. We will be back again on Friday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. Thank you very, very much for listening. I certainly do appreciate the support. You can find me on Twitter, also on YouTube, Facebook, Discord, in the Verge Currency channel, also in Telegram. Same thing, Verge Currency. And so until Friday, y'all have an excellent day. And we're going to close it out. Last dance for the night, Sabotage, Beastie Boys. Thank you again for listening, and y'all have a good night.